you've got 40 years here, right?
That's right.
So you've witnessed a lot of, I guess, a lot of banking history. You know, not necessarily just in Mississippi, but in the industry as a whole.
Yeah, absolutely, absolutely. We've had the hurricane, we've had the floods. Back even in the early 70s, we were still in the coast counties, still looking at problem loans from Camille.
Yeah.
So I mean, we you know, in the whole thing. And since I've been in the department, we've had 7, I believe, maybe 8 commercial bank failures over the years, which is not too bad.
In those years that led up to, say, the mid part of this decade, you had a savings and loan thing. You had various other a lot of bank. It sounds like here, instead of expansions, you've had contractions.
Yeah, that was just buyouts from out of state. You know, locally buyouts. The S&L obviously impacted the economy and the things that are going on, but at that point in time, the S&L industry was regulated by a separate state agency. So we didn't regulate the S&Ls at that time, but ultimately we did get that authority when it got down to like 4 S&Ls left, and they couldn't support that agency. So we got them.
Oh, okay. So who was doing that? The Department of?
No, it was a separate Department of
Savings and Loan
Association. Yeah.
Oh, okay.
And but the savings and loan savings banks, it's number 4 in the state now, and they're all federally chartered.
Okay.
We don't have any state chartered ones. And matter of fact, one of the federal charters, there were 5, and one of them converted to a state chartered commercial bank.
It was like a fast car that got away from everybody.
To some extent, and then, you know, I've made the statement that's been a little bit of egg on everybody's face.
Mm-hmm.
Of what's been happening. You know, the banks, you know, were selling, you know, making mortgage loans, selling them. The banks did what they're supposed to do. Some of the, you know, non-depository things, that some of those loans were being made and put out into the industry, and then getting ground into sausage and made a mortgage-backed security, and then they were made A paper when it was probably D paper that was put in there, you know. So there's some things that the rating agencies overlooked. I mean, a little bit of everything, you know. Just the basic community bank in Mississippi and in the nation did what they're supposed to do. You know, it was some, obviously, you know, it's a few around that had some problems, but what was happening, Ted, was that the real estate values were going up so fast, for whatever reason, you kept having more equity, you know, so that took care of your loan to value ratio. And then when it all hit, then those values just tanked, and Mississippi certainly don't have the problem as in, I think Nevada is the most shining example, where I think about 70% of their mortgages are underwater. They owe more than it's worth.
Wow. South Florida's probably not too far.
Probably not. Probably not.
And so regulators were, as these run-ups were going, your ratios look okay.
Yeah.
And then bam.
And they were, and the developers were still making their payments, those kind of things, and then it started slowing down. Then the guarantees kicked in, and then the guarantees, you know, the guarantors couldn't pay anymore, so it kind of just hit the wall.
In states like Mississippi, you've got your eye on the community banks and some of the regionals, what they're doing. The things that were going on with the giant banks. I mean, did y'all talk about? Hey, does anybody wonder what how Lehman and all those are leveraged and what this stuff they're selling? And I mean,
it was some philosophical, you know, conversations about those things.
Y'all would have lunch and go, wow, this is a trade.
And you know, this too big to fail kind of thing, and propping up, and you know, we as state regulators, if you've got a problem, just fix it and close it and go on. You know, those kind of things. But it was the attitude of the comptroller of the currency, or whatever reason, to keep propping them up and so forth. Just coming up old school, it's hard to wrap your head around an institution, say like Citicorp,
Right.
that operated in all 24 time zones in probably 100 different countries. You know, it's just kind of hard to wrap your head around that.
Right.
You know, and that's why you even in some we segment things that we look at and do samples and get patterns of practice before. That's the only way you can do it, to see what's happening.